Welcome to Uncaged, the show that celebrates thought leadership from today's top business leaders. The program provides a voice to amazing executives from around the globe who are shaping the world of business today and mapping the path to the commerce of tomorrow. Excited to be talking to Ted Clark today. Hey, Ted, how are you?
I'm doing great, man. Thanks for having me.
It's great to have you on Uncaged today, Ted. Ted has over 40 years experience and most recently served as the Executive Vice President and Chief Operating Officer of H.B. Fuller Company. He has had an incredible career. He's written one book about that amazing career in the adhesive space, and I'm sure we're going to be touching upon all of that in a second. But now he's actually a partner at Iron Path Capital, which is very relevant to a book that he has coming out in September called Buy and Build CEO, Leveraging Private Equity to Build a Winning Global Business. So Ted, I'm sure we'll touch upon the book, but before we get there, tell us a little bit about yourself and your career.
Sure. I've had a kind of an unusual career. Some people call it an unlikely career path. I started as a high school educated shipping clerk at 19 years old with a small public company out in California called Products Research Corporation, or PRC, and manufacturers of adhesives and sealants and coatings for the aerospace industry. I started there as a shipping clerk and worked my way up without the benefit of a college degree to become CEO 22 years later. And then I was CEO there for 6 years and really had kind of record sales and profits, and then eventually was sold off to PPG Industries. And then after that, I tried to use my relevant skills as a CEO, and I did a bankruptcy turnaround, a small assignment for a private equity group for about 2.5 years, and learned a lot about managing and running a business in distress. And then from there, I came up with a thesis and a vision to build a global adhesives and sealants business, and partnered with a private equity firm and built that up to, from an idea to a $700 million business with $140 million of EBITDA over about a 14-year period, which I then sold off to H.B. Fuller Company, and then I stayed on there as a chief operating officer till I left to become a partner at Iron Path.
That's amazing. I mean, I always feel that leaders that come and kind of go through all the steps of a business have a much better understanding of what their employees actually go through than the guys that just step into the big job without doing that. So I love that thesis of shipping clerk to CEO. But now you find yourself in the world of private equity. And in fact, actually, you have a book coming out about that as well. Tell us a little bit about Buy and Build CEO and what people are going to find in it.
Sure. One of the things is, I think private equity capital is sort of misunderstood. And, when I started in this over 20 years ago, I had no idea what private equity was. I read some articles in, I think it was Business Week, and, management, they called them LBOs at the time, and, partnering up with people that would provide equity. And initially enough, I wanted to try and buy PRC, the company I was CEO of, and actually partnered with the Carlyle Group, which is one of the largest private equity companies in the world, and took a pretty hard run at it, but lost out in the bidding process to PPG. But it really sort of opened up something for me that maybe there's an opportunity with private equity to create wealth for myself and my family and others, and so then I tried this. I got a call from one of the private equity companies I'd met, and said they had this bankruptcy turnaround, and I thought, well, you know what? Maybe I'll try that. Right? It'd take me out of my comfort zone a little bit, and which it did. It was really a completely different situation, managing a distressed business, and and did that, and went through the process and preserved a major part of the business that eventually came out of bankruptcy. Then I left there with enough confidence to sort of go to a group of private equity companies and present pitch them the thesis I had about consolidating participating in the consolidation of the adhesives and sealants industry globally. I asked for $100 million of equity without having a company or anything. Pitched the idea and found a really great private equity group called Quad C Management that was willing to back my play there. And then I used everything I'd learned over my 26 years at PRC, the networking, the other companies in the market, and went out and sort of found a platform company in 2003. So the book kind of takes you through the whole process. How do you develop a pitch? How do you know that you've got the right vision and strategy? And then once you have that, every step gets harder, right? So it's a high risk sort of game, right? Because everything's time fenced. If you can't find a platform company in a certain period of time, then boom, it's all over. If you get a platform company and you can't find the right add-ons and you can't build something that mirrors your vision, then boom, it's over, right? So it's a really interesting, and I think readers will find it to be a very practical look at private equity and how you can use private equity to really actualize a vision that you have, rather than just sort of being a kind of CEO that goes around and you work, you're CEO of one company and something happens there and then you get another job as a CEO of another company. This was an opportunity for me to really have more of a creative insight into what I wanted to achieve, and really kind of found that and drive it into a successful business.
Yeah, into a massive global business. I mean, it's an incredible story. You mentioned up front that there's perhaps kind of misunderstandings of private equity. What do you think people get wrong about private equity?
Yeah, well, I think, most of first of all, I think the private equity industry doesn't do the greatest job in promoting itself, right? And I guess it's because if private's in your name, it's, maybe that's the way they feel about it. But, the stories in the business press and the media, tend to focus on, kind of quote unquote asset strippers and, people that come in and just cut costs and, do a quick flip, right? Well, really the opposite is really true, right? It's, private equity is an opportunity to put equity to work in good businesses. I mean, I would say the majority of private equity companies are looking for good, well-run companies to invest in that have a story, that have a thesis that they can build on, right? And so I think, while there's opportunities if you take a public company private to sort of reduce some of the overheads because of all the public reporting, that's fair game, right? But it's not really the thesis that drives the growth. The thesis has got to be built around, how do you take a company that's doing, $100 million in EBITDA or $200 million in EBITDA and get it to, $300 or $400 million in EBITDA. And the only way you can do that is really with a sound vision and strategy and a growth mindset to create value for yourself and your investors, who, by the way, the other thing I think people misunderstand about private equity is that all your next door neighbors are one way or the other invested in private equity through their pension funds or their 401ks, right? So it is one of the asset classes that has higher returns. So there's a mix of private equity with, bonds and public equities and so forth. And so it's an important part of really how we create value in the United States, to support these pension funds and endowments to universities and so forth.
So you mentioned one thing, Ted, that I thought was kind of important. I mean, it's going to seem so obvious to you, but you looked for initially, it seemed like that first company, the company that you were going to build everything around. Tell me a little bit about that. Like, I mean, how big does that have to be versus kind of the add-ons that you're adding on from there?
Yeah. Yeah. Well, so in my case, I had the goal of building initially a goal of building a $300 million company, right? So that was stated in my thesis, right? Of 300 to 400 million. Um, and and to get there, I was looking to try and find a platform company that was doing, let's say $100 million in sales. Uh, and then do these add-ons, which in a highly fragmented industry like adhesives, there's a lot of companies that are 20, 30, 40 million in sales that you can acquire an add-on. The reality though is always different than the thesis, right? So what we found is, we had, five or six things in the thesis, right? It had to have a good management team, had to have some kind of technology, it had to have some position at two or three important market segments. It had to have good, cash flow history and so on and so forth, right? And what we found is when you design your kind of platform company, you end up with about 50 or 60% of it is probably where you start, right? So, and that's part of this sort of working with private equity, and if you wait around to get the perfect platform, you may never get started, right? So, but yet if you get a weak platform, you may never get to your vision, right? So finding that balance was really important, and we found a company that was had a lot of it. It was called Royal Adhesives, and it was had a great factory and great R&D lab. Good management team. Had good technology. Had a leading position in a couple of different markets. But it had one huge problem. It had a customer concentration problem. It had one customer that was 65% of its sales, right? So that put a lot of pressure on us, right? Because we thought it would be good to do it, but some risk there. And through diligence, we got pretty comfortable that at least over a 5-year period, we'd be able to really maintain most, if not all, of that business. But it put a lot of pressure on us to do these additional, for organic growth outside of that customer, and then also doing smart acquisitions that we could begin to reduce that concentration issue before we, would do a planned exit at some time in the future.
Yeah. Now, I mean, I can only imagine that throughout your 40-year career, the adhesives world has changed dramatically. And, we've lived through this moment with the pandemic where supply chains have been impacted dramatically. I'd just be curious to get your thoughts on perhaps what has changed on your philosophy or the way you do things over the last couple of years, maybe new things that have creeped into your model of how you go about stuff with the way business is operating now.
Yeah, well, through the pandemic, I was running the three global businesses at H.B. Fuller with 72 factories throughout the globe, 32 R&D centers, and it was we went overnight from being on overnight flights to New Delhi and Shenzhen and all these places, visiting factories, working with management teams, to really no travel at all, right? And a lot of uncertainty. And one of the things that really helped us is that over the previous couple of years, we've reorganized our company from 5 business units to 3. We had made a decision, the CEO and I made a decision that, we wanted to get closer to our customers, right? So we wanted decision making closer to the markets we were serving, and globally we were serving 30 different markets. And through that we went through a process culturally of sort of working with our leaders and giving them the authority to make decisions at a level closer to the customer. So we're kind of in that process of, we want to have a kind of guideposts and a good global strategy process that's driven from the bottom up. But once we have the agreed strategy, we want the teams to really run their businesses, right? So we were kind of creating this esprit de corps around the idea that we wanted this agile kind of approach. And just coincidentally, we had gone live with these 3 new business units, I think in December of 2019, right? So we managed them, without any issues for 4 months, and then all of a sudden we had the whole world on fire with COVID. We really had to kind of accelerate our trust within the company, right? So it was okay. We had a great team in China as an example, and they were kind of affected early. And, we said, look, we can't, whatever you need, we'll support you, but, you're going to have to come back and tell us, what's the best way for us to keep our factories open, right? So our goal was to keep all our factories open globally and do it safely. And we were able to do that with, in China and, all through Southeast Asia, India, Egypt, Europe, of course, and of course, kind of the Americas here. And each one of those teams really stepped up. I mean, we learned a lot about the idea that you hire people, you pay them a lot of money, and many times you don't let them make any decisions, right? So our goal was to let them make decisions and sort of report back to us. And we learned a ton from that, right? So it helped us actually coach and advise other leaders throughout our global system.
That's really interesting, Ted. First time I think I've heard that. So you really kind of empowered the team in a way, because I guess in a more distributed or kind of a global company, but perhaps a less closely, tethered global company, you kind of have to, right? I mean,
yeah, that was it. I mean, we, fortunately we had, things like Zoom and Teams and all that to, talk to people. And we did a lot of that, right? So the other thing we wanted was kind of to allow the decision making to be done. We wanted connectivity, right? So we wanted to be seen as coaches really, and not as decision makers. And even in the United States, I mean, all the states have different rules, right? So we had to leave. Our people in Illinois, for example, had to deal with different problems than our people in California. And, to that extent, I mean, I personally, I was leading the whole COVID compliance thing globally. I was reading sort of governor orders and, all this kind of stuff so that I could advise people, right? So they weren't spending their time doing that, but we could advise and say, look, here's why we think this is a little bit different, and, how you can keep the factory open and what you should be thinking about in terms of compliance. But it was a time where if we had not had the trust in those local leaders by the employees, we would have had a real problem, right? Because most of them wanted to come to work. We were essential industry, and they wanted to come to work, but they wanted to know that we were being thoughtful about how we were protecting them and their families. And still allowing them to come to work. So yeah,
I think that, sometimes we forget that factories have to stay open to make things. And, the idea that everyone can work virtually doesn't work if you're running a factory. But, now we find ourselves in an interesting year, 2022, lots of other new, wonderful economic challenges. I mean, how are you thinking about this year and what's on the horizon?
Yeah, I think we're feeling, pretty positive. I mean, obviously, inflation is now, the real challenge, right? And it's all at least from my perspective, it all sort of began being driven out of that, January 2021 freeze in Texas, right? Well, for my industry, for specialty chemicals, but people don't really get how critical chemicals are for the entire supply chain. So, any non-metallic kind of material is made from some kind of chemical, right? And that really started this whole problem. And we saw two things, right? We saw a real dislocation in how the supply chain was working, and then we really saw the prices starting to increase as a result. So, I think we're coming off a very high, consumer price index, just this last month. Pricing's been going through the system. So we've been doing two things, right? So we took the view that, look at, we're an important, if we're an essential company, we're an important part of the supply chain, right? So we have to go above and beyond to try and support our customers. And, we were doing things, as an example, we were leasing 747s and moving, polymer materials from China to the U.S. to keep, for a product line that's used in the commercial construction industry for roofing. And our customers said, look, we can't stop these projects. You have to, you tell us what it's going to cost, but we need to have it. And the customers, ended up paying for this additional service, right? So it was something where you had to think out of the box a little bit. And our people, initially it was, well, we think the raw materials are going to go up, they're going to come back down. And I think, we took the view early on that, no, this is going to be something that we're going to deal with for a number of years, right? And I think while it's getting better, we're still dealing with it in 2022. And I think, there's two things now, right? So you still have this underlying inflationary pressure, but you are starting to see things slow a bit, right? So now, hopefully we're going to miss this kind of stagflation, which, unfortunately, I was in a business the last time we had that in the 1980s. So
I think we all hope we miss that one, Ted. It'll be good if we do. And so now the book Buy and Build CEO comes out in September.
Yep, September 13th. It's for me, it's been a great experience to write it. Although it sounds like it's about me, it's really about the private equity industry from an operator's point of view, right? So I didn't want it to be so much from an investor's point of view. I wanted to look at it from an operator's point of view and somebody who had a dream to build a business and but not the equity to support it, right? So you have some equity, you have a little bit of equity, but if you're going to build what ultimately turned out to be a $700 million company, you need quite a bit of equity to get the business kicked off, and so it's been a fun story to tell. And
Ted, I think it's an amazing book, actually. The reality is that I think almost all entrepreneurs at some point come to that scale moment, or CEOs who are running existing businesses also have that moment where they say, hey, maybe there's something bigger here. Maybe there's a bigger thesis. And how to navigate that is tricky if you don't really know it. So I think it's definitely a needed piece of literature. Ted, this is really interesting stuff that we've been covering today. If someone wanted to reach you, where's the best way to get in touch with you?
They can just go to my website, which is tedclarkauthor.com, and that's probably the best. It has a lot of information on the books and my background, and it features some articles that I've written for different magazines and other publications. So that's the best way. And then you can look me up on LinkedIn. I think you just type in Theodore Clark or Ted Clark, and it should pop you to my LinkedIn site. So that's probably the easiest way.
Excellent. Well, listen, Ted, thank you so much for joining us on Uncaged today. We've been speaking with Ted Clark. Ted has over 40 years experience as a senior executive in a variety of companies in the adhesive space. He's written now 2 books about his first book, Shipping Clerk to CEO, and now the new book, Buy and Build CEO. So you can get a copy of that starting in September. A good gift, hopefully, right? And thank you so much for being on the show today, Ted. We look forward to having you back.
Great. Thanks. I appreciate
Cheers.
it. Thank you.